Should you take your tax refund or roll it forward? Well, here to talk with me about this is Ken Rosenbaum from Buckingham Strategic Wealth. Ken, welcome.
Thanks for having me here, Robert.
Pleasure. So you just wrote an article about this very topic for Retirement Daily. Where you're going to have you walk us through it. Where to begin?
Yeah, I think the idea of a refund and what to do with it it's an interesting conversation. So many people have different approaches to it, but I think oftentimes the best is to understand kind of where did the refund come from to begin with. So kind of starting off with, there's a couple different camps. If you're in the camp of my son who's 17 and just has his very first job, some of the money was not paid to him. It was withheld to the government. He didn't understand that. Told him at the end of the year, it's all going to work out just fine. So here we are filing his taxes, and I tell him, hey, you're going to have a little bit of a refund. His eyes get as big as saucers. He's already spent it 10 times full in his mind. And my reaction to him was, do you really think we should spend this money, or is there something better to do with this refund? And after a moment of looking at me, well, that's a trick question, Dad. If you're asking, there must be something better. And we decided, let's take a look at either having some savings, put it towards savings. Maybe we invest it into a Roth. He's too young to begin thinking about education funding for himself. But if you're a family with young children, using this as a forced savings method is not a bad thing. So using it for a good purpose would be a good reason to have a refund, or a good use of having a refund. Perhaps paying down debt, not just savings, but if you are carrying a high interest credit card and you have this bit of inflow of money, great. Maybe you pay down a little bit of that high interest debt. We would suggest, though, that the idea of just spending it may not be the best use of this refund.
Yeah, sounds great at first blush. What about, let's take a step back and just take a look at the basics of paying income taxes. What do folks need to know about that?
Yeah, so for those who are working at a company, when you get a paycheck, you may recognize that you don't get all of your paycheck. There is some being withheld by your company. And the idea is they're doing the best they can on an estimate of what they should be withholding, so that at the end of the year, effectively, you should have a pretty close amount of what you owed to what you paid. And the difference between those, what you owed and what you paid, is either the refund or you owe more money at the end of the year. You may hear some people saying, oh, I got a big tax bill at the end of the year. That's because the withholdings was less than what was actually due. But this idea that the withholdings are just an amount taken out of your paycheck, paid to the government on your behalf, and then at the end of the year or the beginning of the next year, really, you do a true up. You find out, was my estimate accurate? And understanding that if you're in the camp of, wow, I get a great refund, maybe understanding that effectively what you did was you overpaid the government more than what you owed. Is that a good thing? Most of the clients we work with don't like that idea. I don't want to pay any more than I need to, and they get irritated.
Yeah.
One of the reasons they get irritated is the government doesn't send you a thank you note. They don't give you interest payments on that overfunding. So it's not a great idea. It's not a great strategy. But it is just an estimate, and if there is an amount due back to you, great. The question then becomes, well, what do you do with it? So a couple different angles to take a look at that. One, before we even get into the what do I do with it, taking a look at what options you have, what strategies do you have to maybe eliminate it in the future. You can work with your HR department, get what is called a W-4 form, and adjust your withholdings. If they're withholding too much and you get a large refund, well, that's not a great idea, as we just talked about. So you can adjust your withholdings on that W-4, which should lessen that amount of a refund. Some of individuals who pay quarterly taxes, either solely quarterly, or maybe they pay estimates and have withholdings, they have a lot of flexibility to kind of be looking at this throughout the whole year and maybe adjust their back half of the year's estimated quarterly payments to make a better amount of payments in total so that they don't have a large refund come the next year.
Mhm.
So kind of understanding that there are some strategies to manage the amount of taxes you pay is an important element.
Yeah. Ken, let me go back to the W-4 for a second. We get lots of questions from readers, especially young taxpayers, who are confused and befuddled by the W-4. They don't know whether to enter 0 or 1 or to use 1 and add a dollar amount. Any guidance there that you can offer?
So if you're new to it, I would say answering the questions may be the best guide to do. After you get a little bit of a rhythm and seeing, is there a large refund each year? Well, then maybe we could say, if you raise the number and have a higher amount of exemptions, then your withholdings go down. So that may be a way to increase your withholdings exemptions by 1. Others will ultimately, we just actually had a conversation with the client this morning who got a large tax bill because their income went up and for whatever reason, their withholdings went down. And we talked about this saying, well, let's figure out what we should be withholding in total for you and your spouse and go to our HR department, get the W-2s or W-4s, and we will adjust and put in either maybe 0 exemptions and then just say we want this dollar amount withheld per paycheck. We can work at it that way, but just knowing that there are strategies and there's flexibility to get that more accurate is an exercise worth taking.
Yeah. So in the article, you also talk about alternative methods for paying income taxes.
Those would be the quarterly estimates. Yeah, it's either one or the other, or the combination of the two.
Right. And then with quarterly estimated, there's some 2 different methods that you could use to pay those taxes, either 100% of last year's.
Yeah. So if you are wanting just to make sure that you have no penalties, and if you're an income and you're the accelerating of your income and maybe having more income one year over the next, you would want to make sure that you work with your tax preparer to file what's called under the safe harbor provisions, which makes sure that you are paying previous years plus 10%. And let's say you had a phenomenal subsequent year where your income, hypothetically say, doubled. You would not be subject to any penalties for an underpayment because you met the safe harbor provision. On the flip side of that, if you are, and this is kind of where the article goes, is understanding, okay, I had a refund last year. What should I do with this refund? A lot of people just will default to saying, let me just roll it into the next year's estimated payments. And I think that may be a good strategy in certain cases, and maybe even in most cases, but it should not just be our default. I think it gives us the opportunity to say, what happened last year that may be different than the current year? Maybe last year, because of your business, you had a phenomenal year, and your income this year is going to be a little bit lower than it was last year. Well, let's recognize that and reduce the amount of our estimated payments to this year and not base it 100% on last year if our income expectations will be lower this year. Maybe you had larger expenses in this year. You bought some equipment that was deductible. Maybe you had medical expenses that were deductible, and your income is going to be lower this year. Again, same thinking behind it. Let's just take a pause and do a little bit of a recalibration of what's different this year than last year and do some planning. Instead of just reacting, let's do planning to decide what do we need to do in this current year. And then, as the word even implies, they're quarterly estimated taxes. That's all it is. If in quarter one you estimate one thing and then you have a new set of variables and factors to consider later in the year, know that you have a little bit of flexibility in the subsequent quarters to adjust those estimated payments accordingly.
So we covered a lot of ground. Anything we missed or anything that bears reemphasizing?
I just think that the idea that, this idea of planning is important. Tax preparation sounds like it's just some robotic aspect of things. We just take a historian's perspective of what were the facts of last year and say, what do we need to do? We look at things from a planning perspective, forward looking, to say, okay, what needs to be adjusted? What's changed? Perhaps you're actually gliding into retirement and you'll naturally have less income this year versus last year. let's not overpay based on last year if we know our income is going to be lower, because then we're just going to actually exacerbate this very situation we're trying to avoid, which is having a large refund at the end of the true up cycle.
So Ken, this has been extremely helpful. I want to thank you for sharing your knowledge and wisdom with our readers and viewers. It's greatly appreciated.
Well, thanks for having me.